heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Apollo offers a multi-billion-dollar investment in Intel after Qualcomm's takeover approach. We discuss the reports.
More US curbs and more potential trouble for China EVs.
And a deep dive into the CEO of Palantir and his love-hate relationship with Wall Street as he enters the S&P 500. But first, we go straight to the key chip and M&A story, Ed.
Apollo has offered to make a multi-billion-dollar investment in Intel, according to sources, with the asset manager indicating it would be willing to make an equity-like investment of as much as $5 billion, according to one of the sources Bloomberg spoke to. That follows shock news on Friday that Intel had been approached by Qualcomm in recent days about a, quote, friendly takeover. This following Intel announcing its own strategic rethink just 1 week ago. Bloomberg's Ian King joins us here in San Francisco. Let's start with the latest, which is Apollo considering an equity-like investment. What do we know about that? And why would Intel want capital from an asset manager like Apollo?
Yeah, I mean, Apollo has already, we need to point out, Apollo has already invested partially in Intel, taking a part of a stake in a factory in Ireland. So what Intel has been doing is this smart capital strategy that it calls it, which is basically bringing in money as co-investments to kind of like bridge loans for a lot of these investments that it's making to build this factory network. So this might be kind of an extension of that and in a broader sense to sort of sponsor this general turnaround of the company.
A turnaround that has eroded its market capitalization and made it a potential target for someone like a Qualcomm. In extraordinary reporting coming over the weekend, and it would be a massive tech deal.
It would, and you know, there are so many caveats that need to be thrown into the mix here. What exactly does Qualcomm want? Does Qualcomm want the whole of Intel? Is it an actual firm offer? Is anything on the table yet? A lot of these things are unknowns at this point, and you've seen already a reaction towards this potential alliance, saying that regulators would never allow this to happen. It doesn't make sense in terms of what Qualcomm does. But as far as we understand, there is at least a consideration of something going on here.
We called it a friendly takeover offer, which I think with time we'll learn about. There's a technology story which Qualcomm has tried to diversify away from its legacy business, which is smartphone handsets, and it's made some progress in the PC market on ARM-based processors. So then you look at what would they gain on the product side of going after Intel, which x86-based processor, and forget the fab part for 1 minute. Explain that technology field to us.
Yeah, I mean, Intel's technology, as we know, has been dominant in PCs pretty much since the PC came into existence. Qualcomm has, over the last few years, tried to get into that with its smartphone technology. Hasn't really happened yet, but more recently it's showing more promise. It's showing signs of actually making a dent in that. If it were to take on Intel's x86 business, it would effectively be throwing that business away. There would be mixed signs. What's it going to do? Which technology is a fundamental one that's going to go forward? Lots and lots of questions there, but certainly it would be getting hold of still the dominant brand in PCs.
Ian King reporting this throughout, and we must add that companies thus far have not commented to us about the story. Let's go now to an investor, at least in Qualcomm. JoAnne Feeney, partner and portfolio manager at Advisors Capital Management. You hold shares in Qualcomm. If it could possibly go through regulators, would it be a good deal from your perspective?
Well, you know, Caroline, I think if anything, the interest that Qualcomm might have in Intel would be strictly on the design side, on the chip designs for PCs. That's still a huge market, and just Intel and AMD are players there. And it's likely to remain the dominant form of technology for the PC CPU. So, I mean, I could see Qualcomm being interested, but I would think that the regulators would have a hard time because, as Ian just pointed out, it would suggest that Qualcomm would be ready to throw away its approach to PC chips, that it's ARM-based, and that would definitely reduce competition. But on the other hand, for Intel, if something like Qualcomm were to buy the design side, it would give Intel a huge infusion of capital, which it desperately needs to shore up the manufacturing side, to give Intel the time it needs to fix the manufacturing process, and potentially, and this is a stretch, I think, for Intel to get into the foundry business, which it ultimately would like to do to diversify.
On that fab business, that's where the relationship already lies with Apollo, and that they've gone in with a deal in Ireland. What do you think about a capital infusion? What sort of form you'd like that to take if we did get one from Apollo into Intel?
Yeah, I mean, $5 billion would help. It's just going to take patience of investors, though, because $5 billion, when you look at the cost of a new fab, is really almost a drop in the bucket. So Intel does need a lot more capital to give it the time it needs to fix the manufacturing recipe, which has really suffered over the last 5 years, and then to be able to build the kind of libraries it would need to become a foundry player like TSMC. And we know Intel has tried in the past and failed under previous leadership. Now Pat Gelsinger has more experience and, I think is the right person to try to make this happen. But $5 billion will help. But it really is going to take patient investors, potentially more infusion of capital to get that job done.
As Ian pointed out, JoAnne, Apollo has an existing relationship with Intel. And when we spoke to them earlier in the summer, they did hint that there could be an expansion of that. Listen to this clip from June.
These type of blue chip, large cap companies, they're not talking about 100 million or 500 million. They're talking 2 billion, 5 billion, 10 billion plus. And so the ability to really come up with those creative solutions in scale is really, really critical. But I think you're going to see more and more of this coming.
More from Apollo?
Absolutely more from Apollo. But in general, just the need for this type of capital is insatiable.
So based on that from Apollo co-president Scott Kleinman, not such a surprise that this has come up. On the other hand, this is a firm that started as a distressed investor in the 90s. When you see a name like Apollo circling Intel, given the news headlines of late, what does that make you think about?
Well, you think about the difficult situation Intel is in, and something like Apollo coming in to help. It reminds me of how AMD's manufacturing side was ultimately rescued through investments by Abu Dhabi and Silver Lake. And that allowed AMD to spin off manufacturing and really be able to focus its attentions on the design side, which ultimately led to its current successes. So, we could see more private capital coming into Intel, and that would really help. There's a huge potential there, obviously, but they have some work to do to fix that manufacturing recipe. So I think it's a positive sign for the ultimate recovery of Intel that we're seeing this kind of investment being potentially made by Apollo, and I suspect it wouldn't surprise me if others came in as well.
JoAnne, at a dinner the other night with another semiconductor CEO, it was not Intel, this person said that Intel is too big to fail in the context of its footprint in the United States. Is that sort of territory we're talking about right now?
Ed, that's an interesting take, and I think that's a fair way to look at it. Clearly, the U.S. government is interested in making sure that we have manufacturing capabilities for the most advanced chips in this country, for obvious reasons, the vulnerability to the political upheaval, that might be possible down the line. So I think that that's a fair view of things, and so that's why I think Intel has a better chance of recovering than if we weren't in this kind of a world where geopolitical risks were becoming more prominent.
And of course, this is why it's American names that an American company, giants such as Intel. Meanwhile, we think about who else could potentially have skin in the game. There was a report that Broadcom will not be following Qualcomm in terms of eyeing a bid. What of other companies that you think could look at parts of Intel?
Yeah, Caroline, I think when you look at a company like Broadcom, they've been really careful about the sorts of acquisitions they make. Companies that already have a leadership position that are succeeding, that perhaps need some fine tuning where they can extract, remove costs and make them even more profitable. So I can see why Broadcom would not be interested in this kind of a situation. Other companies, I think you just have to think about the regulatory challenges. Yes, it has to be an American company. I think Qualcomm is probably the most likely suitor. But again, I think just for the design side, I think the manufacturing side would probably in this kind of a situation be spun off, and that cash infusion from a Qualcomm could really help lead to more success down the line for Intel.
And again, neither Intel nor Qualcomm has commented on any of the reporting at this stage. JoAnne Feeney, partner and portfolio manager at Advisors Capital Management, someone that's covered this industry for a very long time as well. There's another story we're tracking, meanwhile. TSMC and Samsung have discussed building major new factories in the UAE in the coming years to help satisfy soaring demand for AI computing. That's according to a report in the Wall Street Journal citing sources. The journal says the discussions are in early phases and the projects might not pan out, given the array of technical and other hurdles that they face. Karen.
So much coming up, Ed. For one, more curbs could be on the way for China's auto tech. What this means for the EV sector and well beyond that. Meanwhile, look, we've got to just check in on these markets more broadly. We are having another positive day after 2 positive weeks on the Nasdaq 100. We're up only about 0.25%, but we know some of the chip makers that are on the move today. This is Bloomberg Technology. Now, more potential trouble for China EVs. US officials are set to unveil a proposal to ban the use, the importing, the testing of Chinese and Russian technology, in fact, in automated driving and vehicle communication systems. It's according to sources. So I'm pleased to welcome, very late from Hong Kong, one Danny Lee, who has been reporting this out. And it feels as though this is getting ever more expansive, not just the hardware, but the software as well.
Yeah, absolutely. I mean, after we saw this quadrupling on tariffs on Chinese EVs to over 100%, now it's a targeting of the China and Russian-made kind of software and hardware that's tied to these kind of connected, autonomous, driverless kind of systems. We will hear more from US officials and particularly the Commerce Department, but all of this is just to try and defend and strengthen the US auto industry, which has really struggled against the Chinese EV makers. And it's just fascinating when you look at China's biggest EV maker right now. It has a market cap that is combined the size of Ford and General Motors. And so you see just how much in terms of leaps and bounds these Chinese EV makers have come on, and so how the US have had to try and kind of step in here. And, you know, when we do see the US taking action, there is legitimate concern when it comes to data privacy, data management, transferring of data, and also hacking. But this really does set the stage for more kind of tensions in this kind of strained US-China geopolitical relationship.
This is interesting because for our Bloomberg Technology audience around the world, tariffs on a physical product like an electric vehicle are easier to understand. What's harder to understand, Danny, is what is a software curb? What would that mechanism look like?
Yeah, I think it's more the software that's contained inside some of these products and making these systems runs, particularly around cars, and particularly as we see a bigger proliferation of electric vehicles, for example, which have pre-installed Chinese software and particularly hardware. Even, for example, LiDAR, a key part of this autonomous driver assist systems. And so we are seeing that there is this kind of reaction that we will wait and see for what China says. And once these plans are laid out by Washington, but it's interesting that the first time we saw these tariffs being hiked by the US, even US Treasury Secretary Janet Yellen was hopeful that China wouldn't retaliate, but there's clearly that expectation that China would. And some analysts we had spoken to today, I think that this raises the likelihood that this could be the case. But it is also fascinating because Tesla is in the middle of this. They need China to approve its driver assist system to be rolled out and it'll be approved by next year. And it seems like if Chinese software and hardware is blocked from the US market, US tech could benefit in somewhere like China.
Bloomberg's Danny Lee, terrific reporting from Hong Kong. Thank you very much. Sticking with EVs, a new trend is gaining steam among thieves hunting for copper, vandalizing EV chargers. Charging companies are catching more and more people on camera cutting cords across entire stations, typically to strip out the copper and sell it for a profit. This year through June, nearly 1 in 5 US public charging attempts ended in failure, according to JD Power. Roughly 10% of those aborted sessions were due to a damaged or even missing cable. Caro.
Extraordinary. Meanwhile, we go back to the political discussion right now because Vice President Harris says that she will help grow investment into artificial intelligence and digital assets. Her first comment on the crypto space since running for president. Let's discuss all of this with Bloomberg's Mike Shepard in DC. Finally, she starts to talk of crypto, it feels like.
Well, you're right. This is, in some ways, an olive branch from Kamala Harris, the Democratic nominee, who will be facing off against Donald Trump in November for the presidency. This is an olive branch to an industry that has been highly skeptical and critical of the Biden administration, which they see as taking a much more burdensome approach when it comes to regulation and to oversight. And this is a sentiment that Donald Trump has seized on in trying to court some of these deep-pocketed crypto investors, a number of whom hail from Silicon Valley.
What I find interesting about this, Mike, is it was in the context of a fundraiser, kind of a calendar date on the campaign trail. Do we know who was in the room, who she was appealing to with the AI crypto message?
Well, there is obviously the investor message of the people who would be in the room, but she is trying to signal this more broadly. There are reporters attending all of these fundraiser events, so the remarks are calculated for more than just who is in the room. She is trying to signal that, and this harkens back to her roots, going back to her youth in the Bay Area. I mean, she is from California. She is somebody who understands and embraces the tech culture. She is trying to signal that she is much more open to innovation and all that would need to go into it. She, of course, is not walking away from any call for safeguards on industries like artificial intelligence or cryptocurrency and digital assets, but she is at the same time trying to signal that, hey, we want to work with you. We would like to do business with you and not stifle innovation.
Bloomberg's Mike Shepard out of Washington, D.C. Thank you very much. Now, coming up here on Bloomberg Technology, Cloudflare's CEO joins us to discuss his company's new tool to help other companies analyze and control how their content is used by AI companies. That conversation's coming up next. This is Bloomberg Technology.
Today, Cloudflare has announced a first-of-its-kind way to help websites analyze and control how their content is used by AI companies. Now, it's also offering a marketplace for pricing content mined by large language models. Let's discuss all of this with Cloudflare's CEO, Matthew Prince. Just set the scene for us for a moment. The Bloomberg website, any website, how often are we find its content is being touched on, used, mined by large language models on a daily basis?
Yeah, so for the average website, about half of the traffic that it receives is from some sort of automated bot. And the large language models, the AI bots, are growing like crazy. They're about 25% of the total bot traffic. So if you're putting content online, it's getting scraped, it's being included in these LLMs. And up until Cloudflare launched what we did today, you didn't have any control over that.
And now, how technically do you have control over it? What are you doing behind the scenes to make sure that it's either stopped or at least monitored?
Yeah, so Cloudflare has been, from its earliest days, the best in the world at identifying what's a human visitor to a site and what's an automated or a bot visitor to a site. So what we've done is taken that same technology and then classified all of the bots that are being used by these AI companies. And then the first step is giving anyone with a website, anyone with content, visibility into how their content is being accessed by these bots. The second thing we do is we let you pick and choose either I don't want any of these bots to access my site, or maybe I don't want certain of these bots to access the site. Once those two things are in place, the last step, which we've announced today but are going to be rolling out over the months ahead, is actually a content marketplace where we can return the quid pro quo, where content creators can get actually paid for the content they're creating that's helping train these large language models.
Matthew, in the first instance, who's signed up for this? List who the early customers are.
Well, so this is available for free for every single Cloudflare customer. And Cloudflare sits in front of more than 20% of the web. So a huge percentage of the web is using this. What we've heard, though, is from our largest customers, large media companies that are creating a large amounts of content, that they can't keep up with these AI bots. And so Cloudflare is in a unique position to be able to say, listen, if you're scraping this content, if you're getting value from this content as an AI company, you should be compensating the content creators. And yes, the large companies like Reddit are able to get these deals done, but we want to bring that to anyone who's creating content anywhere on the web.
Matthew, I want to go to the recent news of last week. We covered it from the ground in Brazil that X, the platform formerly known as Twitter, used your technology to briefly make the service accessible again in that country. My specific question is, Brazilian authorities have said that Cloudflare, your company, have worked with the government to understand how they did it. Why did you work with the Brazilian authorities, and what did that look like?
To be honest, I don't know what the Brazilian authorities are talking about, because we didn't specifically work with them to block X or to make X available in Brazil. What I would analogize this to is everything that's on the web, at the end of the day, has a number associated with it, which is the IP address. It's sort of like your telephone number. And you can imagine in the days before you could port your telephone number, if you switched from one cell phone provider to another cell phone provider, your number would switch. Same thing happened with X. We want to deal with them where they started using our service, stopped using a competitor of ours, and in the process, the IP address switched. Brazil was simply blocking the old IP address. That made them temporarily available. Brazil was then able to block the new IP address, which was accessible. There was nothing that Cloudflare did to facilitate that. There was nothing that X did to make that harder on Brazil. It was simply a coincidence of us winning an enterprise customer.
The timing is a coincidence, though. Were they won worldwide or just in Brazil? How much was this a one-off transition?
No, it was across the country. And again, you know, sometimes things are just coincidences, but in this case, obviously, I think they were surprised. We were surprised by the attention. And again, there was nothing that X asked us to do in terms of eliminating the ability for Brazil to block the content inside of Brazil. And there was nothing that we did to further facilitate the ability for Brazil to block what they were already doing. And today, my understanding is that X is once again blocked in Brazil.
Cloudflare CEO Matthew Prince, thank you for joining us here on Bloomberg Technology. We appreciate it. So coming up on the show, we're going to take a deep dive into Palantir CEO Alex Karp's rocky relationship with Wall Street. It is a fascinating profile. And oh, look, there's me. There's some video that you just don't want to miss. Join us in just a few moments' time. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Let's get a quick check on these markets, because we are at the moment seeing, Ed, once again, a risk-on tone. Look, we're up 0.3% on the Nasdaq 100. We've had 2 straight weeks of gains. In large part, this is a macro field. This is the idea of Fed rate cutting. And indeed, once again, Raphael Bostic speaking up about the need to normalize rates. And then, of course, we have a little bit of manufacturing data that just shows we've still got a robust, if slightly slowing economy here in the United States. So we're up 0.4%. Move on to some of the individual movers, though, when we're looking at the benchmark, because, well, I'm looking at the flurry of news surrounding this key name. We dug into it deep at the top of the show. We remind you once again that Intel is up 1.5%. It really moved on Friday after the reports, of course, that maybe it could be being eyed by a competitor, such as a Qualcomm. That's down by 1.8%. Regulatory discussions abound this morning. Broadcom is not eyeing it, we understand from the reporting of Bloomberg. But, of course, there was the news that Apollo Global is eyeing perhaps a multi-billion-dollar investment of some shape or form into Intel. They already have a strong relationship. And let's just talk about the rebalancing that also happened over the weekend and is in play today for the S&P 500, Ed.
Today, Palantir is getting a spot on the S&P 500, a milestone the data analysis giant has long been after. And yet, Palantir co-founder and CEO Alex Karp has had a bit of a love-hate relationship with Wall Street. Bloomberg's Lizette Chapman took a deep dive into the story for Bloomberg Businessweek and joins us now. As you know, I've spent a lot of time with Dr. Karp. We can get into him as a person, we can get into the company. But what was it you were trying to do with this profile in the magazine? It's a fascinating read.
Right. So, as you said, this has been a long-time goal of Karp's and the companies to join the S&P. And what's interesting is the huge split between the way traditional Wall Street investors, institutional investors approach the company, and the retail investors, who he calls tendies, who have created this massive following for Palantir and all things Karp, including Reddit's calling him Dr. Daddy Karp and the like. And this kind of irreverence that he has carried through, and he promised he would when he went public, and he's carried it through to today.
The best bit is if you scroll all the way down to the bottom of your story and the link, the YouTube link that just shows us Dr. Karp talking to his loyal investors in the retail community about being admitted to the S&P 500. Let's just watch a little bit that in delight, Lizette. Run the tape.
They do not comprehend how we could have turned a switch and gone to GAAP profitability and gone from what adults, professional managers, and some analysts thought was a Frankenstein monster powered by a freak show leader, me, to a dynamic, clearly profitable company worthy of and admitted to the S&P 500.
I'm hoping we'll be able to see him powering his way through the woodlands with those polls, Lizette. But that speaks a lot to his desire to work against, in many ways, Wall Street, but now he's having to appease them at the same time.
Yeah, that's right. And it's interesting because a number of retail investors do back him for the same reason that institutional investors are not backing him at the same, pace and fury. And it really breaks down to two things. Number one is tech. And number two is leadership. Now, on the tech side, a number of institutional investors simply don't believe the Palantir's claims that its AI sales are going to hit the traction that they say that they're going to, both on the commercial side and also in the government. We got to remember that Palantir, for the first time this year, is going to be making more money from its commercial customers than it has in its government ones. Now, on the personality side, there are some institutional investors, some analysts that simply don't like the irreverence that Alex Karp brings to the table, and have also questioned his management style and some of his judgment calls, including the ill-fated SPAC venture that they launched about 2 years ago. And some analysts say that they still haven't completely taken their lumps on, even though they have, reconciled it on a financial basis.
Team in New York, let's just play it again. Alex Karp walking through the woods, because it is him. It is absolutely him. He's unusual. He doesn't behave like a typical S&P 500 CEO. He's very outdoorsy. He has moved himself and the company to a certain extent away from California to Colorado. But he still delivers. He's combative. Just explain more to me about him as a leader, as a person, and why we care, why we've written a Businessweek piece.
Right. The interesting thing about, well, there's so many things that's interesting about Dr. Karp, or Alex Karp, but one of the big ones that really is important to focus on is the fact that he, along with his two co-founders of Palantir, Stephen Cohen and Peter Thiel, have structured the ownership of this company so that they have super voting rights and perpetuity. They did this when they structured the company to go public, and when the S&P relaxed the standards, allowing for multi-structure shares to be accepted, Palantir was admitted to the S&P with that. So we do care about him because he will continue to control it.
Yeah, co-founder Peter Thiel, President Stephen Cohen, all getting pretty star treatment in that way. Lizette Chapman, it's a beautiful read. Thanks for coming on to describe it all. Ed, what have we got coming up?
The other news headlines in Talking Tech. And first up, the US and India have agreed to work together in setting up a semiconductor fabrication plant in the South Asian nation. The proposed plan would bolster manufacturing in the country and will be enabled by India's semiconductor mission and strategic partnerships. Plus, Rightmove said it will contemplate an $8.1 billion sweetened bid from Murdoch's REA Group, its third proposal in less than 3 weeks. The offer values Rightmove 2.8% higher than its previous bid in a statement, Rightmove says it will carefully consider the increased proposal. And Thailand's virtual banking race heats up. The Bank of Thailand says they received 5 applications but plans to grant no more than 3 licenses. The central bank expects to announce the winners by mid-2025 but did not name any of the applicants. Karen.
Coming up, a big fundraise from Headline, $865 million in its latest fund. We're going to be speaking with partner. That's coming up next. This is Bloomberg Technology.
Headline announced that it's raised $865 million to invest in growth stage companies and has hired a new head of growth to lead the fund. Here to discuss is Headline growth partner Nancy Xiao. Welcome to Bloomberg Technology. Big fund, growth stage, good. We've been doing a lot of early stage. It's an interesting development. What is the mission statement of the fund, and what do you want to be doing with the money?
First off, thank you so much, Ed, for having me. I'm really excited to talk about our new global growth fund and strategy. Headline broadly has been around for almost 3 decades, and this growth fund represents a new step in continuing to back great founders generationally across all countries and be able to support them in all parts of their journey. So I do think in terms of Headline's overall growth strategy, in the past, they've been focused on doubling down on existing winners in their portfolio.
Yes.
This new growth strategy has brought on a new team, so myself included. We've all come from various different institutions, bringing lots of learnings from all of the great people we've worked with and the great track records and resources and networks that we have. And we're really trying to find the best founders and support them to the ends of the earth using the great backend that Headline's already built.
But finding them can also be challenging, right? I think, you know, the firm has experience, but the environment's different. You know, you're seeing Series A's now where the round size is so ginormous. It is sort of reminiscent of a growth stage round even 3 or 4 years ago. How do you play that?
I'm glad you mentioned that. So just backing up a little bit to what you said in terms of finding them can be challenging. Headline's got 3 really unique aspects. I would call it, you know, the people, the global multi-local presence, and the proprietary tech and process. So in terms of this proprietary tech and process, the Headline team has really invested in a ton of back-end infrastructure, and they actually walk the walk when it comes to that. I think as VCs, we often invest in, you know, great tech, and do we incorporate it ourselves into our workflows? Well, Headline actually does. We've got a great sourcing tool called Searchlight, which basically our CTO calls advanced signal processing. And we look at all sort of 8 million entities of companies that there are globally. We process all sort of public, proprietary, and third-party data sources and use our own in-house algorithms that have been fine-tuned over the last few decades, and now we've got time series data spanning over a decade. And then we surface the right signal for our global multi-local footprint of brilliant investors around the world to then go meet. So we've got people on the ground.
You're meeting often, Nancy, at that point, in companies that aren't just based on the West Coast in the US. You're looking at them in Brazil, you're looking at them in Berlin, you're looking at them worldwide. When you think about these large valuations that Ed was speaking to, where is some of the opportunity that Searchlight, and indeed, I know you've got other users of technology within as well, to be able to then look at ultimately making these companies more efficient?
Yeah, absolutely. We continue to see tremendous opportunity globally, particularly in Europe. We've got boots on the ground and great investors and partners in Berlin, Paris, London, and other places like you mentioned, who actually speak the language, understand the local idiosyncrasies of all those cultures and companies and incentives. And we try to find the best companies there. In fact, in Europe, actually, 2 decades ago, only 5% of venture funding was flowing there. I think as of 2024 year to date, it's something like 18%. And when you look at the actual economic value creation globally, there's still plenty of opportunity for us to be able to appropriately match the funding sources with the great talent density and opportunity we're seeing there.
You've got such an extensive portfolio over at Headline. Some of them perhaps haven't been treated that pleasantly on the public market. I think of the success stories that have become a little bit beaten up, like a Bumble that's been in the public market, Farfetch as well. But then you've been in the new really hot names, Mistral, for example, in France. Are you going to lean into the AI opportunity? Are you going to keep on consumer tech? Where are you thinking some of your investments are going to land?
A lot you mentioned there. So across all stages, I think we have to be aware of certain macro trends, but generational technologies, companies and products and founders are building as we speak right now and in every sort of market cycle. So we'll continue to back them. As it relates to AI, of course, it's a huge buzzword, and a lot of companies are thinking about how they can incorporate the new generational technologies appropriately into their workflows and into their products. I want to back up a little bit and just think through when there are big platform shifts or new technologies, how these get adopted. It typically follows this sort of S-curve, which is to say the first few years are kind of the early adopters that might be more experimental and on the front lines of adopting this. And usually, let's say after like 20% market penetration, it really inflects and it gets to that early majority and late majority. And after that, it'll plateau more when the laggards have adopted it. So I think there's been a lot of excitement about these new Gen AI technologies and LLMs. But when you're a hammer, everything looks like a nail.
Right.
And I think the smart founders are thinking through which products are actually appropriate to apply which forms of intelligence. And there's a lot of nuance there that I wish we had time to cover today.
I wish we did too. Come back. Let's get more nuance. Nancy Xiao of Headline. We appreciate it. And the big fundraise. Meanwhile, coming up, we're going to be joined by Veena Amanath from Deloitte, because we're going to break down how their new report on the state of trust in technology and AI perhaps painting some tough pictures. This is Bloomberg Technology.
Trust in organizations and their emerging technologies is declining. That's one of the insights from Deloitte's latest AI and Technology Trust Ethics Survey out today. And we're joined by Deloitte's Technology Trust Ethics Practice Leader, Veena Amanath, for more. In fact, there are several conclusions. For example, if you look at the year-on-year change and you talk to professionals or technology industry workers, many more recognize the good and the use of the technology. But at the same time, the extent of concern also increases. What are the other findings?
Yeah, for me, that was the most exciting part, that everybody's recognizing the value in AI, but also recognizing the risk part of it. Here's the bottom line, Ed, right? The biggest risk with AI is not using it at all in the organization. And people are kind of level setting. The other big finding for me was, 80% of companies have rolled out ethical tech training or AI ethics training. And 70% of the employees who take it are acknowledging there's a change in their behavior on how they approach technology, how they think about technology, which is a huge turn rate.
Let's just back up a second. And what are the surveys showing that people understand ethical use of AI to be? What is ethics in this context?
There's a few. We look at it from quite a few dimensions. The one that came up to the top, actually, Caroline, was on data privacy. And we have robustness and reliability of the algorithm, fairness and bias, whether the AI is safe and secure, whether it is being responsible, whether it is the right thing to do for society. So it covers a broad range, but different dimensions. What we saw rise to the top, Caroline, was the need for safe and secure AI.
I want to tap into something you just said.
Yeah.
A conclusion is you have to be using AI. You would be foolish not to.
Yes.
Loads of people watching this show will work with Deloitte, right?
Yeah.
If you're a technology company or a normal company, Deloitte might help you bring a new CRM system in, something like that. How high is the anxiety to rush in AI tech right now?
I would say it was high a few months ago, but now it's kind of, that risk factor is coming in early on in the conversation, and the need to be responsible about it, to mitigate those risks early on going in. You can get the full value of AI only if you also proactively some of the risks that come with it. The biggest thing that came out of the survey, the biggest concern is around reputational damage and the financial impact of leveraging AI.
So, Beena, the takeaway is go slower, be safe, or something else, briefly?
It is go fast, but be aware there are risks that come with it, so address it proactively.
Perfect. Beena Amanath, so nice to have you, Deloitte's Technology Trust Ethics Practice Leader, on the survey. Now, one company that's really focused on AI is Meta, and it's actually kicking off its big developer event and hardware showcase on Wednesday. The company is likely to be showing off its new VR, its mixed reality technology. Now, let's get a check-in on what to expect. Kurt Wagner, what are you training your eyes on?
Yeah, I mean, historically, this conference has been all about virtual reality, right? So the Quest headsets, the metaverse was something we heard a lot about a couple of years ago. It was here where the company renamed Facebook to Meta. So I do think we're going to hear a lot about that. But really, thanks to our good friend Mark Gurman, we also know that they're going to be diving into some augmented reality glasses. And we're going to get to see a prototype of these glasses that they've been building for years and sort of a glimpse into the future. I don't think it's something that's going to be widely available to the general consumers, but it is going to give us an idea of what they view as the future of AR and how they're trying to take some of these bigger, bulkier glasses and move them down, scale them down to something that's much more manageable on a day-to-day basis for people.
Kurt, you and I will be there together. The irony being that stood side by side in real life, we'll probably be interacting through the metaverse. It's interesting because we've had Google I/O, Apple WWDC earlier in the summer. How do people feel about MetaConnect? Is it like kind of the roaring festival of technology that other companies hope that their annual developer showcase is?
I don't think it gets quite the reputation, certainly as the Apple event, just so much history there with the iPhone, even Google I/O. I mean, this is a sort of a conference that used to be really focused primarily on software developers who were building onto the API of Facebook or Instagram, right? It has shifted over the last couple of years to being more of a hardware showcase, which, Meta has invested in very aggressively. But as you both know, I don't think we think of Meta as a hardware player in the way we think of Apple, right? So they're getting there. It's growing in popularity, but I don't think it's quite on the same level as WWDC, for example.
Although people have been really excited, particularly by the glasses, by the Ray-Ban collection. And what does the developer ecosystem look like around that? How have they managed to build the right application to be served on these hardware?
Yeah, so the Ray-Bans are the consumer version of what these glasses should look like. They're not quite as powerful, right? So there's not quite as much developer stuff happening with the Ray-Bans, but there is a ton of developer stuff happening on the higher end, right? With the Quest, of course. I think the idea is with these new AR glasses, it's somewhere in between those, and that there will be a lot of developer interest in building on that moving forward.
Really quick, Kurt, you kind of profile Lee Chen Miller, somebody at Meta that has a key role here. Who is she and why do we need to know about her?
Yeah, the super short version, she is in charge of those Ray-Ban Metas, but she is also the head of product for these new AR glasses that they're building. These two projects are eventually going to meet in the middle someday down the road. So I think she's just a really important person to know, because if this is the future Mark Zuckerberg envisions, that we're all going to be wearing these glasses on our head, this is the person who's leading that product effort right now. You can read about her, of course, at Bloomberg this morning.
Kurt Wagner, let's go read it and have a safe flight over to the West Coast. We appreciate it. Thank you so much. Meanwhile, another thick and fast edition of Bloomberg Technology. So much to digest, both East Coast and West Coast, Ed.
Yeah, there's a lot going on in the news cycle. I still can't believe that we're doing a story about Intel being bought by Qualcomm. That, I'm sure, will continue to be a thing. Recap on the podcast. We had great reporting and great guests. You know where to find it. On Apple, Spotify, and iHeart Online. Always on the Bloomberg platforms as well. Caroline's in New York City with the team. I'm out here in San Francisco with the team. Brace for a busy week. This is Bloomberg Technology.